Good morning, everyone. This is Eric Clare. I'm the CEO for Digital Concepts 2.0. Thank you for taking a moment to stop by. This is our first investor update. We'll be doing this once a month as we continue to move forward. We launched on the 17th of May, just last week. We launched with an introduction via LinkedIn. We let people know this is our mantra, this is our stake in the ground. 100 companies, $1 billion valuation, 3 years. Growth through acquisition is our story. So in the next 4 to 5 minutes here, I'll show you where we've been, what we've done. We had some small capital come in a couple of months ago, which allowed us to grow our presentation, get our story correct, and begin to develop the relationships. So we're clear the agglomeration target audience for us is the HVAC construction and facilities management businesses. That's our core focus. We want to become the best in North America, understand this industry, being known for agglomeration. Our selection criteria is pretty simple. 400K EBITDA net revenue, that's a minimum. They need to be debt free, have to have a desire to grow the business. We are not looking for companies that want to sell their businesses and move on. We're looking for those who want to grow, build their value, and move forward. So we're going to implement an effective long-term strategy, exit strategy for those guys so they understand how the process works. So our job really is a job of education. So you can quickly see here, we were able to identify exactly how many people in each particular category that we're going after. So as you can see here, it's electrical, plumbing, drywall. It's a much larger audience than this, but the HVAC represents 7,500 companies that fit within our 400K plus criteria. If we just use this narrow focus just in the US, not Canada and Mexico, we've got approximately 19,000 potential companies that could qualify for agglomeration. As you saw earlier, we set the goal of 100. At this ratio, it's a 0.5% response rate. If we can get a 0.5% of those people that qualify, that want to move forward, that are willing to work with us and agglomerate, become part of the bigger public company, that's where we'll be. Now we know Unity Group, they'll pay anywhere between 3 to 6 times net revenue for companies that qualify. I base this just on the minimum 3. The net revenue is $1 million, because we usually put a couple of companies together, so it's a bigger offering. In that regard, our 5% share represents $150,000. Every deal we do is worth about $150K net to Digital Concepts 2.0, and that's broken up into cash and stock. Stock is held for 12 months, but as you know, the stock value grows. The stock value is really the bigger play here. And we'll touch on this again in a moment. We'll let you know what we've done so far. We've gone through the lead development process. So the website has been built. So if you've been watching Digital Concepts 2.0, you've seen it evolve over time. We've gotten the story much, much tighter. We've got our lead generation processes working. Our numbers are slowly starting to creep up, and people are starting to look and pay attention. We've done our email outreach and testing program. For the last 2 weeks, we've been testing headlines, doing A/B split tests. The numbers are coming up, so we're encouraged by what's happening there. We've also got our funnel ready. As early as May 23rd, we'll have our first webinar, and then we'll have a webinar every couple of weeks after that. Once the webinar is done, we'll be able to automate that process. Toby Street from Unity Group will be joining us on the webinar, telling the full story, giving all the detailed information. We've got a full frequently asked questions that we'll be going through, so the recorded version will have all the details. And then the webinar's focus is to drive people to the application, where we capture their information. Everybody who submits an application, I'll speak to directly, learn more about their business, get understand their goals and objectives, request their documentation, and make some decisions based on that documentation. And of course, in the webinar, we've had that stylized so it looks excellent. The story flows smoothly. Toby loves it, and we'll be constantly updating that as we go on a non-stop basis. On the 17th, we launched with LinkedIn. This was an exciting event. So we wrote an article, placed it on LinkedIn, began to do our social media work. In the first few days, as you can see, we had 328 likes, 19 comments, most important, 55 shares from a little over 1,138 views to date. 55 shares, we got 47 founders that were reached, and most importantly, we got 6 founders that were connected. So people who saw this, read it, talked to some people, then connected with me directly so we can have an ongoing communication. So from one article, we have 6 prospective new HVAC and construction owners that said, I like what this is about, keep me up to date, let's begin the process, which is exactly what this article was meant to do. We'll be doing more articles, 1 or 2 a month, that tell different stories from different perspectives, all about agglomeration. We've also solidified our partnerships. We got our documents together with Unity Group, with the offices in Singapore, London, Silicon Valley, and New York. We're in the middle of an actual deal now where we've received the paperwork from a prospective agglomeration partner that's based out of Las Vegas with offices in the Philippines. They're looking to buy a second company, and we're putting those pieces together as we speak. We suspect that if that moves forward, as it's continuing to move forward, that deal will be done in the next 60 days or so, putting us way ahead of schedule. We're also working with HVAC magazine, Contractor Magazine, Canadian Contractor, and just today, it looks like we'll be going in September to the large HVAC conference, Comfort Tech. So we'll be there as well. Then after this, we got to do some more lead development expansion. We know we have the story right now. People love the 100 companies, $1 billion valuation, 3-year story. They like the idea of how agglomeration works. So we're going to be going on the speaking engagement circuit. So doing some more PR campaigns. We've gotten invitations to small business administration meetings locally. We're going to be reaching out to all the major speaking engagement opportunities so we can tell this story and tell it well to a large enough audience. But the response so far has been excellent to anybody we've spoken to, so we need to expand that. And of course, our magazine alliances, our chambers of commerce, and the HVA construction associations will be working with all those guys to bring the whole program together. I'll bring this back to you again as we talk about what's coming up in the future. 100 is our target. Multiplier is 3. Every deal is worth about $150K each. So here are the wealth multipliers. So of course, we're in the acquisition process, and we're going out to acquire qualified HVAC construction and facilities management businesses. But as we speak to each of them, we help them understand really the excitement that they should feel, and we're also going to help them learn how to acquire other businesses in their local areas so they can be a dominant force. So the acquisition process in and of itself becomes a wealth multiplier. The shareholder dividends, we help prospective owners recognize that this public company pays dividends on their shares, so they can have their shares and earn revenue at the same time. Then, of course, there's the bonus incentive for business owners. So, almost every business owner says, well, what if I do better in terms of my gross revenue than the guy over here? Well, there's an incentive for that. You get triple time the bonus in terms of shares based on your net revenue increase, the difference between where you are now and where you were last year. And, of course, there's a publicly traded stock value. All of the focus is on increasing the valuation of the public company. As the value of the public company grows, so does the stock value. So, if I take the Warren Buffett kind of perspective, this is value investing. All the companies we work with have no debt. They all have positive cash flow, and they're all growing, all run by seasoned professionals. So here's a worst case scenario. Our target's 100. Let's cut it in half. Let's say it's 50, but in the first year, we do 10. Of that 10, the cash revenue is 300. The initial share value is 1.2 million. So that's $1.2 million worth of the shares at the purchase price at that time. So that'll give us a $300,000 cash gross profit. We suck at all of our expenses, marketing, PR, everything else. Payroll for that first year gives us $129,000 in expenses, $171,000 in net revenue. Then we do the same thing and double that for year 2, year 3. The real value, as you'll see, is here. This is the share value. This is where we think the greatest value is going to be. If it starts out, let's say, worst case scenario, $1, and that share goes to $2 or $3 over the course of 3 years, that's where the real growth is. And that's what we're excited about. We know that as we start to bring on companies, we bring on our first 10, we're seeing it happen now, actually. As more and more people get interested, we see more and more people want to participate. And then over time, we're going to raise the net revenue requirement. So we go after larger companies so we can do that. Unity Group has a great deal of experience in this area. They did this with TMG. They started out with a relatively low point of entry. And then over time, they went from several $100,000 net revenue to $1 million and change net revenue requirement. So here's what we're requesting. We just need $125,000 to cover the entire year. The infrastructure is built. The story is built. We've got our messaging in order. We are testing best stories. We just want enough money to actually do the marketing. We've built the infrastructure. Now we need to get it out there into the marketplace. So we got product marketing, content development, really advertising. Most of our advertising is going to be LinkedIn. It'll be working with many of our magazine partners and the associations, as well as the speaking engagements. We want to make sure we do enough public relations so that people know exactly where we are. We can get booked at the events and we get the opportunity to speak. They won't pay us to speak, but they cover the cost of speaking because we have a story to tell that's of value. And then, of course, the founding team needs to stay alive between now and the end of the year or the end of the 12-month period of time. So there's a stipend in there, a small stipend for them. There's 3 of us to make up the entire founding team, myself, Andy Duncan, and Mary Ruth Belzy-Preed. We have done the sweat equity to get to this point. And now we just need $125,000 so that we can cover the entire year, build the momentum, and head our way toward our goal of 100 companies, $1 billion valuation in 3 years. We are on the way. We are seeing tremendous response from everybody that we talk to. I can send you the information from some of these people on the comments they made. We will send you at your request all this documentation as well as links to the articles that we've created. We've got the Google Plus that's up. We've got our Facebook page that's now up. We've got our Twitter feed that's now up and functioning, picking up new members all the time. So we are on the way. It is actually happening, and we are mid-deal on one deal already. So that's our story. 100 companies, $1 billion valuation, 3 years. Digital Concepts 2.0. My name is Eric Clare. Thank you so much for taking a moment.